What's up everybody, Nate here, and over the last couple of weeks we have seen the systematic failure and collapse of one of the largest cryptocurrency exchanges, FTX. Now the CEO of FTX, Sam Bankman-Fried, is being called on by Congress for scrutiny and illegal actions and to carve more government oversight for the entire cryptocurrency market in general. Now the big fear right now in the cryptocurrency world is that this whole FTX situation is going to bleed into other markets or into other exchanges. Cryptocurrency is going to suffer because of it, and we have seen both situations happening, with BlockFi having a very similar situation, starting to file for bankruptcy, and your major cryptocurrencies also starting to fall by more than 20% in just a few days. So today I kind of want to talk about the systematic failure of FTX and how this entire situation could have been avoided and what you need to know about cryptocurrency exchanges and crypto in the future. Now this whole situation with FTX was a complete failure of management from the FTX team, particularly the CEO Sam Bankman-Fried. And the collapse of FTX ended up coming down to three major things: mismanagement of the company, mismanagement of funds, and sort of the diversification of cryptocurrency in general. Now let's talk about the mismanagement of the company first. Now in its bankruptcy filing and in some recent reports, it was actually shown that a lot of the company leaders and a lot of your management didn't really know what was actually happening in the company. They didn't know where resources were being allocated to. In fact, they didn't even really know how many employees actually were working with FTX. Now, this is something that when you're a startup, when you're in the tech space, things are happening very, very quickly. You are growing at a really rapid pace, and you have a lot of situations where you're not able to track things 100% of the time. These things do happen, but the problem is FTX was basically being neglectful of all of its entire employees. It wasn't really managing anything right to begin with. We've seen this happen a lot in the past, but the most recent example would be WeWork. WeWork was somebody that owned office spaces, and then companies could come in and then rent those office spaces, and I believe they still have a few locations lingering around the United States, but the problem was WeWork just did not know what it was doing in terms of company management. WeWork had a lot of great ideas. It was sort of democratizing this entire space of offices. Startups didn't need to rent an entire office building anymore. They just needed a floor of one office building, and you could have several startups in one single building. Not only that, WeWork wanted to create a community, and they wanted to create an elementary school and all of these different things with their space. They basically wanted to just take a space and have you become the creator in that specific space. So that created sort of a community feel, and it was very, very popular for a very short period of time. Problems started to rise though when WeWork was taking on too many costs, and that exact same situation happened with FTX. They were suddenly starting to take on so many different costs from all of their entire employee base, but the problem is they weren't really tracking month over month what all of their costs were. They were pouring money into advertising, and they were pouring money into all of these different things, and that brings me to the second point: a complete mismanagement of funds. Now, FTX, from the mismanagement aside, a company can still survive even if it's mismanaged. I know that's kind of crazy to hear, but it does happen a lot of the times in the startup world. A lot of these startups don't have the management skills just yet because they're a bubbling company. They haven't really grown big enough yet to really need a lot of those skills just yet, so they don't really have them and typically don't have them for years to come. But FTX was doing something else. They were actually mismanaging a lot of their funds in a lot of terrible and disgraceful ways. A recent report actually showed that FTX CEO Sam Bankman-Fried was using employee money in order to buy properties around the world. He was actually using this money to mortgage his own homes and a lot of other things throughout the planet, all for the sake of FTX and his own personal gain. Obviously, this was a big problem, but because FTX was such a big company and they had so much money kind of pouring in and pouring out, nobody really seemed to take notice because everybody was getting paid at the end of the day, and the company was still growing. But beyond that, they were also starting to fund a lot of sports arenas, and they were pouring money into celebrity advertising, and even creators here on YouTube. They were pouring out billions upon billions of advertising dollars when they didn't really have the balance sheet to support that in the first place. Now, again, this is something that startups do a lot, and startups will actually become a zombie company if they start taking on too many costs, and the only thing that's really supporting them is investor money. That is exactly what was happening with FTX. They were taking on VC money, they were taking on private investor cash in order to fund their business, but at the end of the day, they didn't really make a solid profit. Sam Bankman-Fried a couple months ago said they had plenty of money to get by. They had a ton of liquidity if there was going to be a crunch on that. But the fact of the matter was they didn't have that money at all. He essentially lied. So now you have a situation where the entire company was not being run right from the get-go. They didn't really have good leadership. Employees weren't being held accountable, and productivity was pretty low. That meant that from the management side, you had a ton of different things going on. Nothing was really being tracked, so they didn't really know what was actually happening. FTX didn't even actually have an HR department at all, so they didn't really know what was going on inside the company. And outside of the company, they basically lied to VC firms and investors, saying that everything was great and that they had profit and that they had liquidity, so investors continued to pour money in. But this money didn't really exist. It was all tied up in other exchanges, and it was all tied up in other VC money and other backers. Initially, it was reported that FTX only had 100,000 investors, so they had 100,000 different VC firms and 100,000 different private investors pouring money into this company. But what we ended up finding out was it was over 1 million. So they had a bunch of small, tiny investors pouring their money into this company in order to get their cash. It wasn't just a few big players, it was a systematic failure. So they also failed from the financial side, right? Because now they have all of this growing debt, and now they have all of these growing problems, and that is where we come to today. Now FTX started to fail because a lot of the aspects that were driving them forward suddenly started to disappear. As the Federal Reserve has raised their interest rates, VC investors and private investors are no longer pouring as much money into cryptocurrency or tech or any risky asset because it's expensive to take on that debt. So they're not doing it. And that was basically the only thing that was keeping companies like FTX alive. So they started to fail, and that's where we come into the whole Binance situation. So Binance saw that they were starting to fail and that they were losing a lot of their liquidity, so they decided to sell their entire stake in FTX. But the problem is now this has started to become an entire contagion of the cryptocurrency exchange space in general, because there were so many exchanges, Alameda to name one, that had a lot of their assets and their money tied up into FTX because FTX was the big player. They wanted to invest in FTX and they wanted to hold their funds in FTX because that was a firm that they didn't see going down. It was so strong, but it was all built on a lie, and now that lie is costing the entire cryptocurrency market billions upon billions of dollars. Not only that, but the last part of this entire triangle of problems was that FTX was sort of betting on cryptocurrency in general. They had a lot of their assets tied up in their FTT coin, which is their own in-house coin. And when times are great and people are investing in it, then this entire coin works really well. It builds your own money, and people are essentially using your own coin to make cryptocurrency investments. That is a store of value that only you can have and nobody else can in the world. However, a lot of other investors were taking FTT coins and putting them on other exchanges, and that's why we're seeing this entire network start to go way down, because the value of FTT is also completely crashed. But then as the entire value of the cryptocurrency market went down, because investors not only are not investing in cryptocurrency firms, they're not investing in cryptocurrency either, because it's a very volatile market. So cryptocurrency has fallen down. We've seen that all throughout 2022, meaning a lot of the assets that FTX was holding also started to shrink. As FTX started to shrink, all of their VC money went away. They weren't getting any sort of funds. That's when they went into crisis mode and basically shut off all trading on their platform. They froze accounts. All of the assets cannot be withdrawn. So now people were basically stuck. And now most likely what is going to happen is all of those assets are going to be used towards bankruptcy proceedings. So in a nutshell, more than likely, most of the assets that are sitting on the FTX exchange will need to be used to pay off all of their creditors and all of the expenses that they have taken on. So basically all of that debt is going to be paid off with investor money. That caused a lot of investors to freak out though in the cryptocurrency world, and they're starting to not trust exchanges at all. So they're pulling their money from exchanges. They're pulling their money off the market, and that is causing the likes of Bitcoin and Ethereum and Solana to basically lose a ton of value all at once, further pushing down the entire exchange market, further pushing down cryptocurrency. And now the cryptocurrency market and FTX are basically basically stuck. FTX is probably not going to exist over the next couple of months. We're seeing BlockFi also talk about bankruptcy too, and a ton of other cryptocurrency firms that had their money tied up in FTX and BlockFi and all of these other exchanges, now they are starting to fail. So this is now a systematic collapse of the entire business side of the cryptocurrency market. So where exactly are we heading next for cryptocurrency and these exchanges? Well, these types of situations only push governments to kind of instill more regulations on the market. Governments don't want to see their citizens losing billions upon billions of dollars all at once, because that takes away from the entire economy, right? And it kind of creates a situation where you have this trillion-dollar industry being completely unregulated, which can cause a lot of other systematic failures if a lot of other businesses and investors suddenly get into it. Imagine if this entire situation happened in the banking system. Imagine if every single business had their money tied up in cryptocurrency. Now everything would be failing. So the United States federal government has to prevent that in one way or another for their own personal interest and for the interest of the entire United States. So that means we're probably going to see a lot more regulation in the years to come. That was happening anyway, but this entire FTX situation kind of sped up the entire process. Now you're probably watching this video and thinking, well, should I actually invest in cryptocurrency? And the thing that you've got to remember about crypto is that it is two separate parts. There is cryptocurrency. Cryptocurrency is a technology that is completely decentralized. You don't necessarily need an exchange for it, and you can trade it and keep it yourself. Yes, it's connected to the United States government, but once it's in your possession, you can do whatever you want with it. You can put it in a bank, you can shove it in your mattress. Of course, I have different opinions on doing both, but you can do whatever you want. It's a free country. The same thing goes with cryptocurrency. And then there's the exchange side. Now, the exchange side is a business that is focused on profit first. They're trying to grow their business, and they want both US dollars and they want cryptocurrency. But if you have your cryptocurrency on an exchange, then the exchange technically owns your crypto. That is just the reality. They can do whatever they want with your cryptocurrency. They can freeze funds. They can basically stop you from withdrawing and trading your assets on the platform. And if they run into bankruptcy, they're going to liquidate all of that crypto. This is why once you make a cryptocurrency trade, it is not a super great idea to keep that money on the exchange. You want to take it off the exchange so that way you have it and can do whatever you want. That way, if that exchange suddenly goes under, like we are starting to see, you have control of all of your cash. And remember, if you want to invest in cryptocurrency, you are investing in something that is a technology, and you are investing because you believe that cryptocurrency is going to play a big role in our economy and our entire world's future. Always do your own due diligence. Never listen to a random guy on YouTube to get your financial advice. You want to invest in crypto because it makes sense for you and your financial goals and your own financial plan. But things like this entire FTX situation teach us all a very, very valuable lesson. You have to be constantly aware of your money, and you have to understand what you're investing in, or else you could end up losing it all. This situation with FTX is probably going to happen in the future, as these things tend to happen with startups and just a glut of money in your economy. But now all of these firms, not just in the crypto space, will probably die off as higher interest rates enter the market, and as more investor dollars dry up. There's just not going to be enough to sustain them, and who will end up remaining are your good, solid, profitable brands that actually have a good business model. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.